Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Welcome, everyone. I'm Indra, Elangovan, Head of Strategic Advisory at Travillian. Community banks are the backbone of communities and have been challenged by some pressures from the macro backdrop. As strong supporters of community banks, we are delighted to have ICBA, Independent Community Bankers of America, join us today to share their views. Joining us today from ICBA is Brett Bolton, President and CEO of Community Spirit Bank from Red Bay, Alabama. Hello, Brett.
Good afternoon. Pleasure to be with you.
Welcome. Sarah Getzlaff, CEO of Security First Bank of North Dakota from Bismarck, North Dakota. Sarah is also the ICBA Treasurer. Hi, Sarah.
Hi, Indra. Thank you for having me today.
Great to meet you and welcome. Jim Sills, President and CEO of Mechanics and Farmers Bank from Durham, North Carolina. Hello, Jim.
Hello, everyone. It's great to be here.
Great to meet you and welcome. I just wanted to add, Brett Bolton is also notably the past chairman of ICBA. Just to go over the topics, the panelists will share their views on general trends today, deposits, GRC, M&A, and talent. Each topic will be led by members of our search team who specialize in those particular domains. And you surely don't want to miss our lightning round on talent. So let's leap right in. How are you seeing the general industry trends and how are you different? Community banks have been resilient for over 100 years. Is this time any different? As proponents of community banks, given the macro backdrop, can community banks sustain over the next 3 decades? I will start with Brett, then I'll go on to Sarah, and then Jim. Brett?
I appreciate the opportunity to kind of lead this off. And the short answer is the community banking industry is resilient, and we're ready for the next 200 years of success leading communities across this nation. It has certainly been a challenge since the large and risky institutions failed earlier this year, but community banks in no way resemble those large institutions. Capital remains strong. Liquidity remains strong at our banks across the country, at my fellow colleagues' banks here. And it's just been another normal day on Main Street for my community bank and other community banks across this nation. And truly, to me, I know we're going to survive the next 200 years because we are the lifeblood of Main Street, as you mentioned. We make 60% of all small business loans across this country, 80% of all ag loans, and the community bank franchise represents 1/3 of all U.S. counties as the only banking presence in 1/3 of all U.S. counties. So that to me is why that we are strong, we're resilient, and we're ready for the next generation of customers, just like we have for the last decades.
Right. I'd like to turn it over to Sarah.
Yeah, it's always hard to follow Brad because he really nails it every single time. But community banks are generally very conservative. We always have been. I'm a 3rd-generation banker, so my grandfather was a very conservative man. My father was, and I honestly hope to pass this on to my kids, and so they can pass it on to their kids as kids. And we do that by retaining our capital. We don't overspend. We retain our earnings. We make conservative loan decisions, and then on top of that, we retain a lot of liquidity. We're making loans in our communities to people we know, to businesses we know, and those are the same people we're accepting deposits from. And so I think that our lending strategy matches our deposit strategy, and we also invest in our communities. Our reputation is everything, and so by investing in our communities and making decisions that lift our communities, we're going to be around for the long term.
Right. Thank you. Jim?
I would just add that our business models have stood the test of time. Our bank is 116 years old. I think the only difference is over time is that we've invested in technology and people. And I think that you'll see that trend continue. So I agree with Brad. Community banks will always be here. well into the future. But we have to keep investing in our human resources and technology so we can remain relevant to the markets that we serve.
Right. So Brett, I'd just like to get some color from you about your one mission concept and how are you using that to help both community banks across the nation and communities as well?
Well, ICBA's mission is to create and promote an environment where community banks flourish. And because of that, it is a one mission focused. There's many trade associations that represent the financial services industry, but there is only one that has a singular focus only on community bank success, and that's the Independent Community Bankers Association of America. And the three of us have the awesome honor and privilege of serving as officers of this organization. And we're all just so passionate about who we are and who we represent, because we truly serve as a protector of every main street across this country based on that relationship focused model of doing business. It's not about transactions for us. It's about working with our customers on a one-to-one basis. And so that singular focus allows ICBA to rise above all of the noise in the industry. And we're able to focus specifically on items that will help our industry succeed. And we do it through advocacy, through education, and through innovation. And all three of those pillars of ICBA's success has that one mission focus at its core, and it's always community banks. So that's why we're all so proud to be a part of that, because of that one mission focus.
Right. Sarah and Jim, would you like to weigh in on that comment?
I'm going to use Sarah's last line. Brad nailed that line, nailed that response.
Right.
Yeah, he really did. You know, he mentioned the three pillars, and all of those pillars are aimed at rising, rising tides lift all boats. And so the education is aimed and tailored to community bankers. It's taught by community banking experts. It allows us to network with other community bankers. The technology focus is focusing on what can we do to help community banks succeed? How can we make technology affordable and solve real community bank problems? And then advocacy is all about community bank issues and things that affect every single one of our banks, and not only affect us, but affect our customers as well.
Right, thank you. I will now turn it over to my colleague, Dale Henderson. Come, Dale.
Thank you, Indra, for the introduction. I appreciate it. I help Travillian. My role is to help Travillian bolster production revenue, such as deposit generation. I do roles as SBA, commercial lending teams, and I also have a 30-year plus background in retail banking. Like yourselves, you've been around a while, so I'm sure we can relate with all the changes that have taken place over the years in deposit generation, especially with our tech-forward approach these days with deposits. I know it's changed and evolved since I've been around. So I kind of wanted to focus on the deposit side of the balance sheet, because that remains pretty much the cornerstone of the sustainability and growth of any institution. And it's what everybody's talking about today. So in today's discussion, I kind of want to focus on the hot topic, as we all know, deposit generation, and the strategies that you're putting in place, the strategies regarding the challenges, the pricing, the trends, and that those topics. So keeping that in mind, I'd like to explore the strategies and the approaches your institutions have implemented or navigating, I guess, in today's economic times. They're challenging economic times, of course. So my first thought is around pricing and trends in deposit pricing and margin pressure. Are you observing any trends in your markets? And could you kind of share any strategies that you're implementing, putting in place to address those concerns?
I'll take that one first. We're located in the 5 largest markets of North Carolina. And so we're competing against some of the largest institutions in the United States. And I think you all are aware that there's a lot of deposit advertising going on out in the communities. And there's a lot of direct mail. So now consumers are very aware of high yielding savings accounts, money market accounts, and also CD specials. And so we're running a money market special. We also have a CD special. We're performing outreach to our customers to just check in on them, just to see how they're doing. But we're not rapidly raising rates all across the board. When a customer comes in, they have a marketing flyer or something, we will tend to match that rate minus 25 or 30 basis points. And that normally satisfies them. They'll say, okay, I'll stick with you guys.
Okay. Understand that. I would assume that the time deposit area is very volatile at this point. So customer service is probably the name of the game.
That's the key. The other strategy that we just recently implemented, we have started to do more outreach to our deposit customers than we have ever done before. Just to check in on them in terms of how's it going? Is there anything they need? Even though we're really just checking in just to see how the whole relationship is going. Because a lot of times your competitors are calling your current customers. And so you have to kind of check in with them from time to time. So that has been working for us pretty well.
Mm-hmm. Very good.
I agree. I started setting deposit rates at our bank back in 2009. And so, for 10 straight years, I just decreased rates or kept them flat. And so right before COVID was the first time that I had ever been in a true rising rate environment on the deposit side. And then COVID came and, knocked everything back down again. And so this is kind of a different environment for us. But I think that because we are a community bank and because we've proven ourselves and we've helped people out of binds, help them, not just finance their dreams, but when you have a problem and you have to call and you sit on hold or you get the runaround, you just don't have that at our bank. And you don't have that at most community banks. And I think that really helps us. And so in addition to running CD specials, like Jim has said, and in addition to reaching out to our customers also feel comfortable reaching out to us. Before they, take up that offer from that flyer, they'll call us or they'll come in and they'll say, well, this is what I got. What can you do? And just as Jim said, we might not meet it basis point for basis point. But if we get close, that relationship and that service makes up the difference. And we're often able to retain that business.
Yeah, I definitely can relate with all of that from my retail background. It's pretty much, exactly what the industry was doing. I was just kind of curious because the market is just so different today. So it seems like it's pretty much still circling back to customer relationships.
Absolutely.
I think it's us just working on that one-on-one basis with our customers. As Sarah said, they know us, we know them, they trust us, and they know that we're going to make sure that we take care of them and do what's in their best interest and our mutual interest. A few years ago, we didn't have as many checking accounts as what I thought we should as far as non-interest bearing. So we launched a reward checking program that still rewarded customers for behavior that they were already doing. Gives them a little cash back, and it allowed us to grow our checking account base through reward checking. And then just like Jim and Sarah said, we're working with our customers one-on-one with rate offers. We've got a MMDA percentage of prime account for a checking, short-term money, and then we've got CD specials as well that we're running. We're trying to keep our CD specials shorter. The market's betting that rates are going to fall within a year, 6 months to a year. And so we're trying to base our CD rate based on those time frames of 6 to 13 months, somewhere along in there.
Nice. It's interesting that you're all doing pretty much similar strategies. You have similar strategies and in different parts of, the nation. So I appreciate that insight. It's very helpful. I think you probably answered a lot of what my next question would have been as far as upgrading the deposit strategy and the trends, how to retain and attract deposits. So it sounds like you've hit most of those. Would you agree with that, or do you want to add something else to that?
Yeah, I would just say I've been doing this a long time, just like Brett and Sarah. But since March, now I look at all of our deposit reports very closely. and all of our deposit inflows and outflows very closely. And prior to that, over the last 8 years, I never even looked at those reports because we were so liquid and there wasn't a challenge of deposits and rates were kind of flat. But now we're really having to manage both sides of the balance sheet.
Right.
That's a great point, Jim. I'll tell you another thing that I'm doing every month. I'm doing it weekly, but certainly at the end of every month, I'm looking at all CDs, what the all-in CD cost is, and then looking at our loans, just making sure we're managing that spread appropriately, because
Exactly.
we have not seen this in a long time.
Exactly. That is why the topic is of discussion every day from every institution that I talk to. It's pretty much a balancing act with, that side of the balance sheet and the lending side. So it kind of leads into the next question that I'd like to share with each of you, and whoever wants to chime in first, that's perfectly fine. But how do those strategies align with the commercial lending side of the pricing trends with the commercial lending side? Since I do a lot of the commercial lending production roles, I'm seeing two different trends depending on your institution. So I'm curious as to your thoughts on, what you're doing, I guess, how you're managing that or navigating through that. It's very challenging.
Well, we offer rate discounts if they've got deposit accounts on the consumer and commercial side. They may get a discount for having deposits with us. Certainly, we're trying to require deposit accounts on new commercial deals that we do, because we all need deposits to fund loans with. So that's something that our calling team is actively attempting to do. Whenever they bring in a new commercial deal, make the deposit account part of the deal, but we're sweetening the interest rate up to allow for that, so that the customer wins, by moving that, because it's difficult. We know from our own lives it's difficult to move those deposits, but that's one avenue that we're attempting our commercial loan customers to do.
That's some good insight there, because I think that's something that I've seen, and I've been in banking since the 80s, and it's still the same. Trying to move a relationship, with a loan, like one bank's not giving you a loan, but they want to have the relationship, and that's always been a struggle. So it's good to hear that you're being successful with that. It's still challenging, I believe, for some institutions.
Yes.
Yeah, it's a balancing act. I think you also have to factor in competition. And some of these larger institutions can reduce their rates a little lower than our rates. And so we have to kind of balance, our actual cost or margin in comparison to really what's happening out in the marketplace, right? In a competitive environment, especially if it's an A+ credit, a really strong credit. And so any deal that's over $1 million and there's an exception to our pricing engine, I have to actually sign off on it, because our lenders, they, of course, you let off with, they want to close the deal. They want to get the deal. And they'll come in and they'll say, can we offer them, 5.99 or 6.25? And I'll say, no, because our cost is our cost.
Right.
And I have to educate them sometimes on our cost is our cost, not the same cost as some $1 trillion financial institution.
The big picture is most important, right, Jim?
Yes, correct.
Yeah. Well, I appreciate your insights there. Sarah, did you want to weigh in at all, or I can move on?
We've actually have a deposit incentive program for our employees, and it's been in place, since probably the mid 2000s. It's been consistent, this focus on bringing in commercial and consumer deposits, because I think, as both of those two alluded to, loan officers tend to focus on the deal and getting the loan closed, and we don't have an incentive on the lending side. We just have one on the deposit side, because we wanted to draw our lenders' attention to the fact that if we're going to make these loans, we need to have deposits to fund them.
Right.
And I think that bringing that to their attention has really made them even more aware of the importance of pricing. Well, can we offer this customer a 5% money market rate? Well, their loan rate right now is 4.5% because they refinanced 18 months ago. So what rate, makes sense? But I think having that deposit incentive program has been key for us.
Yeah, that's always nice when an institution can develop and strategize with and have a successful deposit incentive program. I remember launching one of those way back, not that long ago, maybe 5 or 6 years ago. But it definitely made a difference. Not to mention the digital platform also made a difference too. But at any rate, thank you for your insight there. So I'll move on to the next question, which kind of leads into right now. I'm working on a few opportunistic institutions that want to bolster their production teams. So my question is, since it's kind of varying out there in the industry, there are institutions that are looking to bolster production C&I teams. In new markets, there are much more conservative approaches. So are you do you take a bullish stance to lending versus your deposit generation side of the house? What's your approach on bolstering production teams and navigate the challenges in today's market?
Yes, ma'am. To me, we just do the business of community banking every day, regardless of cycle that we're in. And, we hear all the things on TV that you do, but that's not reality here in rural Alabama, I can tell you. So, if people need deposit accounts, we're meeting that need. If they're still needing CRE loans or commercial loans or 1 to 4 family home loans, I wear many hats as a community bank lender. And so I'm just there at their disposal and at their service, to serve them with the best of my ability. So I always remain bullish to serve our communities. There's never a time, even during the last Great Recession of 2008 to 2012, when a lot of the big banks were pulling in credit. That never happened at any community bank I know. We just continued to serve our communities with our relationship-focused model of doing business. So to me, I'm always bullish on serving our communities, because when our communities succeed, our community banks succeed.
True Alabama service, in my opinion. My grandmother was from Alabama, by the way. So
okay.
I can relate with that very much. I love it. Thank you for that.
Yes, ma'am.
Very inspiring.
Yeah, I'd like to just share something with you that I'm noticing here in the markets where we're located, which is kind of interesting. I'm just like Brad, I'm bullish. I've always been that way. Some of the larger banks actually have their pencils down on certain kinds of deals, and credit and lending is actually contracted. And so some of their lenders are actually contacting us. Is there any opportunities? I'm not really doing anything. They're saying, they want me to push more of the treasury management products right now instead of doing lending. Are you guys still doing lending? And I told them, yes, we're still doing lending. So we are talking to some lenders that are high performers at some other institutions. Haven't pulled the trigger on any of them, but that is just an interesting trend that has surfaced in the last, say, 2 months or so that I've observed.
Yeah, we've actually been seeing that in our market too. I've heard from specific bank loan officers at other bigger banks that have said, I've been working with this customer since January, and now that the deal is getting close, our bank doesn't really want us to make any more loans. And so they're kind of, tightening things up, but now I don't know what to do, because this is a long-term customer. They've worked with me forever, and we're, 90% to the finish line. And so they're looking for a place for those people to go. And I think it's exactly what Brad said. We're always bullish on our community. And so if the project is something that our community needs, or that the customer, needs to succeed or to fulfill their dreams, we're going to do it. We're going to find a way to make it work. If it makes sense for it to work, obviously going back to the conservative underwriting. But if it makes sense and it's a need in the community, we're going to do it. We're not going to say, oh, well, the global or the national economy is not the greatest right now. We're really going to back off. We also understand the economics of our communities and our states really well. And so I think that makes a huge difference too.
So it sounds like you're all kind of open to the opportunistic or opportunities, if you will, for increasing the team if there's a need to. And then above everything else, it's the customer first. So
Absolutely.
Yes.
I appreciate your approaches, and I like all the diversity in your, I appreciate your perspectives. So each of you have really shared a lot of your invaluable experiences today and perspectives on deposit generation. And your insights really going to be valuable. It would be valuable guidance for all of our audience, our Travillian's audience. So I definitely appreciate your time today. And I guess it's time for me to move forward and introduce my colleague, Patrick Cooney, who will be joining the conversation and for another hot topic, which is GRC, better known as governance, risk, and compliance. So Patrick is our lead executive search consultant for GRC.
Thank you, Dale, for the warm introduction. And that was a wonderful segment. That's going to be tough for me to follow, but I'm going to do my best. And Brad, Sarah, Jim, thank you all for being on with us and for your insight. As Dale mentioned, I lead our efforts for our search work based around GRC. And safe to say, I've been pretty busy lately. And that even stems, well before the headlines that we all saw earlier this year. And, it's important that, everyone stays ahead of this game. So I'd love to pepper you with a few questions and insight for everything around GRC. And that would be everything from the governance, the risk, regulatory, compliance. We even tie information security into that bucket as well. And that's where I've seen the biggest spike in my realm. So Patrick Cooney leading our GRC search efforts here. And we'll just go with a couple of questions. We can maybe start with Brad, go to Sarah, and then go to Jim and go around the robin for just a couple of insights. If you have anything pertinent to share, we would welcome that. And the first thing would be around, I would say, regulatory. And the ideal question would be, what regulation is currently either keeping you up at night, or do you have a main focus on, either short term or that you're projecting for down the road? What would be that key regulation that's in your brain right now? And we could start with Brad.
Well, I think Section 1071 of the Dodd-Frank Act is obviously one that keeps us all up at night, that the data monitoring that's going to have to occur with our customers. Another one that all things consumer protection, overdraft reforms that are floating out there. Our customers opt into programs that assist them of making ends meet. And truly, we protect customers against payday and predatory lenders. So anytime that there's regulations or talk of regulations that float around that limit our ability to serve our customers, it certainly raises red flags for us. And we want to make sure that we're getting out in front of those proposals just to make sure that we're able to continue to serve our customers the way that we've always done. FDIC insurance reforms is certainly a topic that's floating around Congress right now. We're so thankful that ICBA was the only national trade association who fought for an exemption for community banks not to have to pay for the sins of those too big to fail firms from earlier this year. Anyone that has $5 billion or less in uninsured deposits doesn't have to pay a dime toward the deposit insurance special assessment because of the work that ICBA did. And so thankful for that. And we're kind of keeping our eye on the ball on all these insurance reforms bills that are before Congress or being contemplated before Congress, because we want to make sure that community banks are not adversely affected by any proposals. We want tiered and proportionate regulations. We shouldn't have to pay for the sins of larger banks and the risky activities of those banks. And then finally, as a part of the bank failures is the Recoup Act. There's bills before Congress right now that would take a look back at executive compensation on any failed institution. And we really feel that that's an attack on the community bank business model, because we've already seen since March that they're not going to let a systemic, too big to fail firm fail. So we're still systemically important to every main street across this country. And so any bill shouldn't include us in any respect. The FDIC and other regulators have tools in place right now to look back and hold executives accountable. So we don't think that we need additional regulations to do so. So those are just a few that keeps me up at night. And that's why we work so hard with ICBA to fight for all community banks in that regard. So Sarah, you pick it up from there.
Great.
Yeah, thank you, Brad. So Section 1071 is kind of my hot button right now. And I say right now, but actually I've been working on it for years. I was on the CFPB's SBREPA panel, which is a panel they have to have every time there's a major rule that will impact a major portion of the industry 3 years ago. And the CFPB has a lot of leeway with this rule. And they basically took what Dodd-Frank told them to do, but made it worse. Worse in my opinion. They added extra data fields for us to collect that weren't required. And, the more data fields you add, the easier it is for you to reverse engineer the data and figure out exactly who we're making loans to. So in my hometown, it's 575 people. We're actually the only town in the entire county. So if we have one butcher shop, one hardware store, one hairstylist, and you have their NAICS code on there, well, anybody can look it up and go, oh, well, this hairstylist, this was her gross annual revenue. And did you see if she applied for a loan at Security First Bank and they denied her, or they approved her, but they didn't approve her original request? And, when the House Financial Services Committee passed a resolution to nullify 1071, Representative Williams said that the CFPB, by passing this rule, was forcing bank employees to, just throw privacy right out the window. And I couldn't agree more. And, we said earlier, community banks make 60% of small business loans. And if we deny somebody in our community simply because the business owner is a female, which is part of the goal of 1071, is to make sure that, lending is available to female borrowers and minority borrowers, our reputation would be on the line. We wouldn't do that. We know that in order for our community bank to survive, we need businesses on Main Street. And we get what it's like to be a small business because we are a small business. And so if you take this rule and you require a bank like mine to spend $100,000 a year based on my estimates to implement it, maybe I'm not going to make as many small business loans. Maybe I'm going to try to stay under a threshold. Well, then all of my customers are going to go to a bigger bank that, maybe isn't doing things the correct way, doesn't have as much reputational risk, is willing to pay $1 billion fine and move on with their day. And so I think that not only with 1071, but with a lot of the regulations, they aim to fix a problem, but they put the regulation on all of us. And then it makes the problem worse because people, leave an industry or consolidate, and then you push those customers you were trying to protect back to the people that don't have their best interests in heart.
Understood. Great insight. Thank you, Sarah. Jim, did you have anything to add on that?
No, I think Brad and Sarah nailed those two questions, nailed that answer.
Okay, I would concur. And a theme that I heard from both Brad and Sarah touched on data, which is a great segue. And it's great that you were, like, as you mentioned, Brad, able to separate yourselves in your world from the sins of those larger institutions. So I think that's fantastic and needs to continue in that regard. But when we touch on data and we get into technology, that leads to a fear that even keeps myself up at night, which would be cybersecurity threats. And this is becoming more and more prevalent. I'm seeing more requisitions from some of our bank clients for putting those investments into cybersecurity. And how do you view cybersecurity protocols, proactivity? Is there a reliance upon third parties? And again, we can start Brad, Sarah to Jim. How do you manage and oversee your cybersecurity threats?
Brad, I'll take that one first.
Sure.
Yep.
Patrick, that's a top of mind issue for all bankers, large and small. It's so critical that we remain vigilant and protect our customer data, but also our bank data. And I think it's important to share with the audience that we are highly scrutinized by our regulators relative to our cybersecurity practices, our penetration testing, our testing of our employees with phishing, our training of our employees related to cybersecurity awareness. And so this is something that is super important for all banks to really take a strong posture to make sure nothing happens to your institution. You mentioned in your question about third parties. Yes, we're heavily reliant on third-party vendors, and they're moving data, they're doing all kinds of things on our behalf. A lot of us outsource our core processors. And so it's important that we properly, we're doing the proper vendor management of our vendors, but also understanding what they're doing to protect our customer data, but also our data that they may have on their servers or up in the cloud. So this is something that we talk about a lot at our institution. I'm on a number of different cybersecurity panels and committees, and this is a top of mind issue, and we all have to remain vigilant with this particular issue.
Excellent. Thanks for pouncing right on that, Jim. I can tell that touched a little bit close to the heart.
Sure.
Sarah, Brad, anything to add on the cyber realm?
Yeah, I would say, similar to Jim, we're focusing on educating and training our employees, but also educating and training our customers, because if somebody gets access to their laptop, their email, and their online banking credentials, they might not breach our system, but they could breach the customer system and, send money out that way. And that's just as important to us. And then we're also investing in, the latest, greatest technology. And so we belong to groups like the ICBA that keeps us abreast of, new technology and new threats. And then on top of that, we, are very diligent in buying cyber reliability insurance and in making sure that we have the proper coverages and that we're doing what we need to do on our end to make sure that we're in compliance with that cyber insurance company's policies.
Smart. Brad, anything to add?
Yeah, excellent points by both Jim and Sarah there. We've got a motto here that we preach to our employees every day, and that's think before you click, because we get so many PDFs, we get so many things that you just got to have your awareness at an all-time high every day. You've got to bring your cyber game throughout this organization. And I stress that we don't want to be that bank that has that reputational risk that, we've been breached. I'm hearing bankers who had some exposure to third parties through this Move It software, program that they didn't even know that they had an issue. And then they find out that one of their vendors had an exposure. So you have to be proactively working with your third-party vendors, knowing whenever you hear of a vulnerability, make sure that your third-party vendors have patched their issues, and it's just something we have to work on every day. From a broader industry perspective, it's why it's so important that we stay on the forefront of all these digital asset bills. We are opposed to the creation of a central bank digital currency too, because of the cybersecurity issues that could bring to not only our banks, but our customers, and just not letting tech companies get access to the payment system. That's really important to us as well. So all of those things, if there were a breach, we would ultimately pay the price for. So that's why we're proactive and trying to make sure that everyone who has access to the payment system in general is held to those same high standards as what Jim mentioned earlier.
I mean, that's great information from each of you. So thank you for contributing that. And it's going to just continue to evolve as technology and threats continue to evolve. So something we need to stay on top of, but it sounds like you all have a really good lock on that. So that's great. I think one of the third items I'd like to cover is something near and dear to my heart, and that would be those talent investments around GRC, something that I've been so heavily involved in over the last, I would say, 2+ years on a grand scale. What would you say would be maybe the most critical GRC talent investment that your bank would need at this time, or that you would consider, or maybe a recent success story of bringing on, a talent in that realm that has made a big difference that you'd like to highlight? We could start with, we'll start with maybe Jim, Sarah to Brad this time around, just to mix it up.
Sure. I'd say for us right now, anyone that has talent relative to risk management and risk assessments, and anything related to compliance and BSA and AML. Those people are very difficult to find or to even attract to a small community bank. And normally in a small bank, we're wearing multiple hats. So it's hard to find somebody that has the depth and breadth of experience in one of those spaces, unless you can get them, generally speaking, from a larger bank, given where we're located. So that's been a challenge for us over the last year or two, especially during COVID up until now.
Okay, understood. And that makes sense from everything that I'm seeing, hearing in my realm. BSA, AML, those are two of the probably primary ones I've been seeing most recently, but it really spans the whole threshold. So thank you, Jim. Sarah, from your perspective?
I feel like I should knock on wood here, but we haven't had to hire anybody in that entire universe in I don't even know how long. Probably since 2012 when I moved up out of compliance and operations. And then we hired, I always call her my twin. She had the same public accounting background as I did. And so we hired her, and we've really developed people internally. And so we haven't had to go outside to hire. And so, if we have a teller that can do so much more and has the time to do it, then we've given them, can you handle the CTR reporting, or can you handle this small portion of internal audit? Because I think it's really important to give opportunities to and develop and invest in the people that we have before we look to hire outside. I think if we were to hire outside, it would be, to Jim's point, we'd be looking at, hiring somebody maybe from a bigger bank or from, an accounting firm. But like I said, we've been incredibly lucky. We have very little turnover, which I think is kind of a common theme in community banks too, just because we do really invest in our people and treat them like we want to be treated, if not better.
Sure. That's amazing. That's amazing, Sarah. That's wonderful. Brad.
Not much more I could add. I mean, we try to promote from within. And I think the best people to elevate is those who have been in the weeds on that front line at the teller window, at the CSR or stand, that knows the issues that are facing us, and then we just try to develop them. And you can see a rising star whenever you've got one, and we've tried to put them in positions of leadership, and we give them the training through ICBA has a excellent community bank focused and centered leadership learning through our Lead Forward Summit and our compliance resources, that a lot of certification courses that are out there that ICBA provides. So we select those next generation leaders, and then we get them educated on community bank focused learning to make us all better. So that's just exactly how we do it as well.
That's great. That's great, Brad. Thank you for sharing. Thank each of you for sharing that insight. And I've seen it from my realm, going from either end, either trying to attract that talent in from a bigger institution, or, building up from your internal pool. And it could be, a strong teller that just has a penchant for, accounting or auditing, and building up that skill set within that individual. And I find that once candidates are introduced to that community bank setting and they get that feel of relationship and just work, it really changes their view, and it buys them in. It completely buys them in. And a common theme that each of you have mentioned, which I've really loved, was, you're tying back to Main Street and the businesses on Main Street and supporting them. And that makes all the difference in the world. There's just, that's not common these days in the grand scheme of banking. So I love to hear that passion behind each of you, to building up your Main Street, supporting them, those businesses. That's what makes me love what I do, the segment that we get to focus in here at Travillian. So this was wonderful insight from each of you. I can't thank you enough for your time and energy today. And I'm gonna now get to turn the microphone over to our leader, the head of our banking and fintech practice, and that would be Brian Love.
Thanks, Patrick. Appreciate it. Hi, Brad. Hi, Sarah. Hi, Jim. How are you?
Hey, Brian.
Good.
I'm going to have a little fun with you guys today with a little lightning round in a minute. And before I get to that, I actually wanted to mention, or actually to ask a question around M&A. So Travillian, we are huge proponents of community banks and achieving their goals. That could be staying independent, growing organically, growing acquisitively. That being said, I wanted to talk about M&A. With revenue under pressure and costs rising across the board, the incentive for banks to get bigger and scale up maybe has gone up materially. How do you see M&A playing out? It's been very quiet over the last year or two for obvious reasons. And what do you think about this for your own markets and for your own bank? Brad, I see you nodding your head. If you wanted to get us started, that'd be great.
Our bank is 115 years old. We are 58% ESOP owned and controlled, and we're focused on remaining an independent community bank. I'm proud of that fact. We bought an old doctor stock here who wanted this bank to always remain independent. So it's close to my heart that our bank always remain an independent community bank. And in my travels across the country, I try to use that platform as ICBA chairman just to encourage community bankers to recognize and be proud of what they provide for their main streets all across this country, and to quit using the word succession planning and truly put names and faces on who the next community continuator was going to be for their bank, and then train those folks up so that you don't have to worry about M&A down the road. It is sometimes a challenge to attract talent in rural America, where a lot of our community banks are located, but they could be located anywhere in this country. We just have to continue to show the value of what it means to be a community banker and how important that role is in leading the next generation of customers and our banks. Truly, M&A is a result of over-regulation of our industry. That's why we work hard for tiered and proportionate regulation so that our community banks can always flourish and be successful. So to me, that's where it all begins, is training up next generation of leaders and then working with consultants, hopefully like you all, who value that community bank franchise and are not just looking to make a deal, but who truly want that community bank to be successful for the next generation. So those things all go hand in hand. And you know, sometimes I use M&A as a bad word because you have some people that comes in just wants to get rid of a bank. So to me, if we train up next generation of leaders, community bank franchise will be here for those next generation customers.
Yeah, I would agree with Brad. You know, our bank is family owned. We're actually 100% family owned, which is, you know, a little more rare these days than it used to be. But we don't have the pressure for, you know, returns like other people do. And my dad is famous for always saying, I can only eat so many steaks. And so once I, you know, have that, what else do I need? And I'd rather, you know, help my employees have a better life, you know, help my community grow. You always have to remember the people that brought you to the dance. That's his other famous saying. And, you know, I just read an article actually this morning that said, you know, there's a benefit to getting bigger, right? Because you get more efficient, but the downside is you get more complex. And being more complex and having more layers flies in the face of our mission to serve our communities. Right now, people can come in and they can say, I need to talk to Sarah, I have this problem. And that same day or within that hour, even, we can get the issue resolved, or we can help them find the resources. And I think the bigger you get, the more you lose sight of that mission. And, you know, to me, I'm kind of like Brad. When I hear M&A, I'm like, oh, why would you want to be a, you know, $100 billion bank or whatever that number is? Like right now, I can name all of my employees, their spouses, what their spouses do for a living, and the name of all their kids, probably where they go to school and what sports they're in. And that makes a huge difference. We all trust each other. We know each other. We've worked together forever. And it makes us a much better team and a much better community player.
Brian, I love their answers. My answer is just a little different. We're publicly traded over the counter on pink sheets. We've been in business 116 years. We do get calls from some of our shareholders from time to time. What's going on? Is there a deal out there that you can get bigger faster? What I would just generally tell you is that we're really trying to grow our bank to be the best $500 million bank that we possibly do, in terms of serving our community, but being profitable and just having a longer view of growing the institution and growing it organically. So we don't really talk a lot about M&A. We're just trying to figure out how can we get to 500 million. We're currently 445 million, but how can we better serve the communities that we are currently serving all across North Carolina? So that's kind of our focus here. But it does come up from different shareholders. And I was with Sarah just a couple of days ago in North Dakota and had a shareholder call me and say, hey, there's something that you may want to look into. And I just told them, that's not what we're looking into right now.
Well, I appreciate that response and very much. And Brad, thank you. In your response, you kind of equated it to talent. A lot of times M&A is propelled by, you know, succession planning, folks that want to retire and they see it as a way to retire. I actually wanted to ask this question because of that response. And you have touched on it earlier. How does a bank, you know, in Alabama or Bismarck or you know, I mean, Jim's a little luckier because he's in the triangle. How do you get that next generation of talent it's really important. There's a finite amount of talent in your regions within banking. So I'll just throw that out there, and maybe Brad, if you want to respond, that'd be great.
I think it starts by telling your bank story in your community, because people pay attention to that. We're a big believer in social media, and we tell our story every day, or we try to. And this, the old saying, it's not bragging if you can back it up. And we're not really bragging. We're just showing what we're doing, that our employees are involved in our communities. So that's number one, being, present and first of mind in our communities. Second way we've done it is through financial literacy programs. So we provide financial literacy in 11 schools here locally, starting with, 10th graders. We've got some 6th grade programs, but mainly for senior high. And then we've got 2 in-school branches that are student-led. So we have several of our students that we call either tiger tellers or bulldog tellers that run their own in-school branch that wind up coming here and being part-time tellers for us, and then some of those have moved into full-time roles with us. So I think it starts with reaching students where that they are. Your local elementary schools, your local high schools. If you're blessed to have a community college or a senior level college that are close to you, work with them and just tell the community bank story. And I think people want to be a part of something bigger than themselves. And there's nothing greater than being a community banker, to be part of something bigger than yourself. So that's how that I think that other community bankers should do it. It's worked well for us, and just encourage folks to look at that.
I'm not sure if anyone else wants to respond, or I can move on.
Yeah, I think Brad nailed it. I mean, it's putting the word out, but then also creating and developing the people that you have. We have so many tellers, we call them personal bankers in our office, but they do so much more than wait on customers in the front line. Some of them are online banking experts. Some of them are doing compliance. Some are doing accounts payable. Some are doing BSA. And I think that it's a good way to test people out, to open their eyes to different possibilities, but also to let them see what they like to do. And that's been huge for us, because we've really been able to grow people. We joke that when you're a community banker, that other duties as assigned piece is big, but we have a mortgage lender that plans all of our events, and every time we do a giveaway at a silent auction, she puts the basket together. Our credit review loan officer is, super analytical. She also does all our Facebook posts, because she's really creative, and she likes that she doesn't come to work and look at loan files all day, that she has some diversity in her day. And I think that that's something that community banks offer that you don't also find at bigger banks.
I worked for 10 years at a community bank, and I learned everything under the sun, from ops to tech, frontline sales. It was the greatest experience in my career. And I think it makes me a better recruiter because of it. So I want to get into kind of the little preliminary lightning round, so we can, kind of get to our conclusion here. So the answers to these questions, I'm looking for brief responses. I'm going to go around the horn. I'm going to go alphabetically from Brad to Jim to Sarah. So tell me, what was the most recent key hire you made at your bank, Brad?
2 lenders, one in an existing market that was looking for a change, and one in a new market that we were planting our flag in. So 2 lenders for us.
Jim?
We recently hired a chief operating officer, an SBA director, and a SBA lender.
And Sarah?
We recently hired 2 loan officers, and they were both due to retirements, but they came from existing banks and had business that they could bring with us, because they felt like they could provide their customers a better level of service at a smaller bank.
Terrific. Past the first level of the lightning round. I would like to hear about a unique benefit that is maybe, to your bank only. Is there anything you offer your employees that qualifies kind of as a unique benefit? Brad?
I think our ESOP program is that unique benefit, because truly the work that you're doing every day has long-term benefits based on the success of the bank. We've got, tellers that has retired with us that had a really, really nice nest egg because of that ESOP program. So it is a real differentiation factor for us.
That's awesome. How about you, Jim?
don't really have anything special. We do have a stock option plan here. And I think one thing I do want to share with your team is that we had to go back and look at our healthcare coverages that we provided to all of our employees. And we started covering more of their cost in addition to our cost. And that was a big home run for us to do that.
It's tremendous. Sarah, how about yourself?
So we have a 10% 401k match. I used to audit companies, and so I know that 10% dollar for dollar is very unique and very high, and I can't take any credit for it, but we've had that since the early 90s. And then also when people have had special things come up, like we had an employee that had a traumatic brain injury last year, we offered to send her and her family to Mayo, which is about 8 hours from here, and we've done that with 4 different employees that have had issues come up. Not all of them have taken us up on it, but because we really truly cared about them and wanted them to get better, not necessarily because we just wanted them back at work. We've taken that above and beyond step.
Wow, that's great as well. So I wanted to change gears as we get towards the end of our program here. Kind of just want to have a little fun with you guys. I think I'd rather kind of hear about you as human beings than maybe as bankers. So Brad, what food or restaurant is your region in Northwest Alabama? I guess you're not far from Tupelo, Mississippi as well. What are you guys known for in that region?
Barbecue would be number one. I would suppose chicken with white sauce. As my travels have come about, not many people knows about white sauce, so you have to look me up for that. And then of course steaks, you know.
Well, you're talking to Philly guy, so it's the cheesesteaks for me, of course. I actually bet a bank in Kansas, the Super Bowl, the Eagles versus the Chiefs, and I lost. I was hoping to get some Kansas City barbecue, and I shipped cheesesteaks instead. Jim, how about you there in Durham?
Similar answer, barbecue. You know, there's 2 different kinds of barbecue in North Carolina, so I would say it's barbecue.
Is there one place that has the best? Or can you not say? It's too, you know.
I can't say.
How about Sarah up there in outside of Bismarck in was it Central North Dakota?
Central North Dakota. I guess, you know, we are known for our beef. We always used to say that the worst thing you could do to offend my grandfather was to tell him you were a vegetarian. But definitely our beef, our steaks, and then also our German food. There's still a lot of restaurants that specialize and make things like Nefla soup and Fleischküchler around here. And I would say if somebody new comes to town, that's what we usually take them to get.
Awesome. And what was the last great meal that you've eaten, Brad? You're around the country. I'd love to hear what you've eaten, and that's been exciting.
Oh, man.
I stumped you. I finally stumped him.
There's been so many meals. You know, you give me a piece of red meat, I'm a happy man. So
Okay.
I'm pretty easy to please.
I'm going to remember that. How about you, Jim?
The 3 of us were up in Boston a few weeks ago, and I had a great lobster salad up there in Boston.
That sounds great. How about you, Sarah?
I was actually going to say the same thing as Jim, just a piece of lobster. You know, that's obviously hard to find in North Dakota, especially anything that's fresh. So I really enjoyed that probably as my last real great meal.
Oh yeah, genuine lobster roll up there in New England is
Oh, yeah.
just the best. Final question. I studied film in college. I wanted to hear, Brad, what is your favorite movie?
Tombstone, Doc Holliday and White Earth.
Kurt Russell. Fantastic. Yes. How about you, Jim?
Any Denzel Washington movie. I'm a big fan of his.
Crimson Tide, one of my all-time favorites. Exactly. Love it. How about you, Sarah?
Gosh, you know, I would have to go back and say like Steel Magnolias. That said, you know, every recent movie I've watched has been something that's G or PG rated with my kids, but so I'm going to say Steel Magnolias.
I thought you might say Fargo, but probably not.
I have never seen Fargo, and just the when I went to college in the Twin Cities, and everybody was like, "Oh, I know what North Dakota is like." You know, I saw the movie Fargo, and so right then and there, I decided I would never give them any of my money.
And you definitely can't watch that movie with your kids either. So.
Right.
Anyway, thank you so much for having a little fun with the lightning round. It was really a pleasure talking to you all today. I'm going to turn it back over to Indra, who's been listening this whole time, and she can wrap it all up.
Thanks, Brian. We can't reiterate enough that community banks are the resilient pillars of our neighborhoods. It was a great, fabulous conversation today. Thank you, Brad, Sarah, and Jim, not only for your insights and perspectives, but for your contributions to your communities. We greatly appreciate it, and we look forward to our continued conversation and interactions. Thank you.